The best investment I've ever seen. Today, we're actually going to talk about 3 of my favorite investments that I'm betting big on 2025 and I think will do fabulously over the next decade. Number 1 is renewable energy. Why AI is driving the demand for renewable energy, why it's cheaper and cheaper, what Trump said about renewable energy that made all the stocks of renewable energy go down and oil go up. But nonetheless, renewable energy is cheaper and cheaper, so people will use renewable energy rather than fossil fuels. After that, we're going to talk a little about crypto and more in specific in stablecoins. How stablecoins transactions, I think they did 17 trillion in 2024, and I think 2025 will be even bigger, which is not only disrupting companies with monopolies such as Visa and MasterCard, but the US dollar itself and why it could be a problem. And of course, we're going to save the best for the last. We're going to be talking about investing outside of the US. So we all know that S&P 500, Magnificent 7, they are a little bit expensive right now, selling at very high ratios, and why it's crucial that you diversify your portfolio outside of the US. My favorite investment that outside of the US has been China, and I've been in dollar cost averaging into it for the last 6 months. And I'm not the only guy who keeps talking about China. Geniuses like Ray Dalio, Michael Burry, and David Tepper are all also betting big on China. And outside of China, there is also great investments such as South America. We all know Melly and NU Bank. They are doing very well and have been growing amazingly. So we might cover those at the end of the video. But first, let's get into renewable energy. So right off the bat, the article starts by saying AI is poised to drive 160% increase in data center power demand. Currently, the global power demand, AI and data centers only consume 1 to 2% of overall power. By the end of the decade, which is just 5 years away, it'll be 3 to 4%, which is a double. And I think over the next 10 years, it can reach up to 10% of the global power consumption. We all know that AI is growing at a scary pace, and we can see right here that data center power demand is poised to go up. Europe has the oldest average age of regional power grids. China has done a fantastic job with nuclear energy and more specifically solar energy. So they are not the best investment right now because they already have that handle. But Europe, North America, and Latin America, those are the ones we want to focus on and a company that invests in them. Before I talk about what specific stock I'm investing in, I just want to show a couple more things. Number 1, the rapid cost reductions in renewable energy, specifically solar and wind. And solar and wind, we can see they're expected to account for 95% of capacity growth, solar contributing 80% of that new capacity by 2030. So this is the future, solar and wind. It makes the most sense. And we can see that the renewable energy market is projected to grow at a CAGR of 17%. And this is why. We can see right here that solar and wind were the most expensive energy sources in 2017. But we can see right here, 2014, it is by far the cheapest, almost 2 times cheaper than fossil fuels and coal. And we can see that coal and fossil fuels are projected to stay flat for the cost-wise, while solar and wind is just going down. So when picking a stock in renewable energy, I want a well-diversified stock that doesn't just focus on North America, but also goes into Europe because that's where integration and infrastructure is going to be built. For that, I chose Brookfield Renewables Partners. So David Pronk did actually make a video talking about them. And in conclusion, in his video said that for the next 5 years, they should grow at a CAGR of 24%, which is better than BN itself. So it is actually poised to outperform its mother company, BN. Why is that? They have major deals with companies like Microsoft where they're building nuclear centers for them, and they are investing all over. They're investing in China. Not China. They're investing a lot in India and Europe, where I think the highest return on investment is going to be. And if you look at the stock, it is beat down. They're giving us almost 7% dividend yield. So this is a nice dividend yield, and it's going to be a high growth stock. I guarantee you that. It is selling for the same levels it was in 2019. And if you look at how the company's been doing, its revenues at 13% CAGR since 2015, while the stock price is only up 2% CAGR since 2015. And right here, we can see how the revenues and the EBITDA has been growing and the stock price has just not been growing at all. It is because Trump has been endorsed by the oil guys, the oil industries, and those guys want to promote more digging of oil. That's what Trump said. Drill, baby, drill. The point is, even if there is no grants or incentive to go renewable energy, it is cheaper. So it is the clear choice, and more renewable energy is going to be put into use. So let's keep moving on. If you want to know more about Brookfield Renewable Energy, check out Daniel Pronk's videos or comment down below if you want a full video, because there is some bad things about the stock. It is not profitable, negative earnings, negative free cash flow. They're only EBITDA positive. 2025 will be a huge year for crypto. We all know that. It runs in 4-year cycles, and 2025 is the year it peaks. But now, specifically stablecoins. What is a stablecoin? Stablecoin currency, it is a currency pegged to the US dollar. So 1 USDC or USDT is equals $1. So you get that stability in crypto. So it is pretty much like owning the US dollar while leveraging blockchain technology for faster and more transparent transactions. And at the same time, it is quicker and cheaper than international payments. So stablecoins is kind of the bridge from traditional currency to the blockchain network to crypto. We can see it gives you a lot more utility. It gives you a lot more access. For example, DeFi. You can access the DeFi platforms, enabling users to lend, borrow, and earn interest on the crypto assets without the high volatility. Because it doesn't matter if Bitcoin goes down 20%, the stablecoin is pegged to the US dollar. And we can see that major financial institutions and tech companies are increasingly integrating stablecoins, which opens up an opportunity for us to gain from that transition. We can see $17 trillion worth of transactions happen only in 2024, and $5 trillion of that volume was for payments. And in 2025, it is expected to surpass $8 trillion just in payments alone. And major stablecoins like USDC had a transaction volume of 1 trillion recorded in November 2024. In 1 month, they did $1 trillion worth of transactions. So what is the best way to invest? That's difficult to say. There's 3 investments that I'm making to benefit from all this in crypto. It's hard to invest in the stablecoin because if you buy the stablecoin, it's pegged to the US dollar. As they earn more and more fees from transactions, that doesn't mean the stablecoin will be worth more. Number one thing that I'm buying is Bitcoin. I'm actually dollar cost averaging it into a Bitcoin ETF to dodge the capital gains. I'm currently buying about $30 a day, and I plan to do that for the rest of 2025 until I sell out. We'll see when. Number 2 is Solana. So if you know Solana, they're a blockchain. They're a very fast and cheap blockchain while all the coins are happening. If you've seen all the meme coins like the Trump meme coin, the funny thing is the Trump meme coin that went to, I think, $8 billion in market cap was built on Solana. So this is pretty much like investing into the company that sells the shovels for digging the gold. So I think in the future, Solana is a clear winner, or at least one of them. That's why I'm betting big on Solana. Of course, the biggest on Bitcoin, which is the safest. And number 3 is Chainlink. Chainlink, I encourage you guys to check it out because it has built an infrastructure for helping traditional companies such as banks and financial institutions tokenize their assets and move on to the blockchain, which I think is going to be huge and is going to be a very slow process over the next decades. Now, if Chainlink does actually win, there's a lot of rumors that they are talking with Blackrock and have some partnerships with them. But if any of that is true, I think Chainlink is going to do very, very well. Now, the best for last, guys. Let's talk about China and the best way to invest in China. First off, we can say what Ray Dalio says. He says that all markets must be judged by the pricing relative to the fundamentals, and at all times, good investments could be found. Now, all of this, you can stop and read through it. It's when he was asked why he invests in China, this is his answer. He has a long relationship with China, has been investing it for decades and decades, 40 years. And to sum up his answer, we can just read this. For those reasons, the key question isn't whether or not I should invest in China, but just how much I should invest in China. If you know anything about Ray Dalio, he has this holy grail of investing, which is his principle of investing. Find 15 uncorrelated investments and invest in them. That means if the US market goes down, Bitcoin doesn't have to go down, gold doesn't have to go down, China market doesn't have to go down, South America doesn't have to go down, and vice versa. So it is finding uncorrelated assets that are set to do well. The 2 super investors that I'm following, what they're doing with is Michael Burry and David Tepper. Michael Burry, you need no introduction to. He's the man who made billions of dollars in the 2008 crisis, calling the Big Short. And he actually did buy puts in 2023 on the NASDAQ and S&P 500, which I don't think played very well since it has been performing very well. But if you look at his portfolio, look at this. 24% is in JD, which is an e-commerce company in China. 21% of the portfolio, Alibaba, another e-commerce company in China. 12% into Baidu, which has the biggest search engine in China, is doing a lot of AI stuff. Baidu is pretty much a Magnificent Seven company. They focus on AI, search engine, advertisements, and innovating new things. Now, the easiest way to gain exposure to China, if you don't want to waste thousands of hours going through all these individual companies in China, it is simply to buy an ETF, like buying the QQQ in for the US market. You can do the same thing for the Chinese market. I actually made a video of all the best ETFs in China. So if you're interested in that, go check it out because you can find the one that works best for you. Ray Dalio has talked about FXI, which is pretty much the S&P 500 of China. But for today, I actually want to zoom in on these specific companies such as PDD, Baba, Alibaba, Baidu. If you look at these companies, since 2016, they've been growing at Baba 29% CAGR, JD 21%, and PDD at 134% CAGR. And in the same time, they're selling, if we look at Baidu, for the same price it was in 2013. So they've had a decade of growth, a huge uncorrelation between the price and the fundamental value of these stocks. And all of these big Chinese companies that's move pretty correlated. If one of them goes up, the chances are the other ones are going up. But there's a couple things I want to point out. First is they're selling for dirt cheap. JD, the biggest position in Michael Burry's portfolio, it is selling at 12 times earnings. 4 times forward earnings. You don't see a company like this selling for 4 times earnings in the US. Now, the same thing if you look at all the other guys. Baba, 9 times forward earnings. Baidu, I think it is 8 times forward earnings. So single digit forward earnings. But now let's talk about what is happening in the macro. Trump just got elected. He doesn't talk well about China. He talks about tariffs. But if you look at what happened the last time Trump was president, so 2016 was the last time he was elected. If you look at the chart, the company went up 56%. Baidu. If you look at Baba, we'll see the same thing. From 2016 to 2020, 2021, it went up 220%. And the funny thing is, it is selling for the same price. It is selling for even cheaper than it was internally is where America was in 2019. They're about to print money. The thing is, they're doing a lot more conservatively, but we can see in the past that China is giving grants to these big companies to do share buybacks. What do share buybacks do? They make the stock price, the e-commerce market in China, 2 times bigger than it is in America. So the tariffs won't affect these e-commerce companies because most of the revenue comes from China anyways. And China is also huge in AI and is doing a lot of innovating. And you have to keep in mind, companies like Facebook, Google, and Microsoft, they're not allowed in China. They protect their own market, so you can only use the companies in China. And if you look at Alibaba, they're pretty much the Amazon in China. And we can see their net margin is 8.9%. And if you look at what the analysts, they project the earnings per share, the net margin to go up 1,500%. And at the same time, revenue goes up. And again, they're selling 9 times forward earnings. The net margins are going to improve for Alibaba because just like Amazon has AWS, which is a cloud computing sector, Alibaba is also expanding into cloud computing, which has much better net margins and much better CAGR. It is growing and it is going to continue growing. But to sum it up, there's a massive uncorrelation between the actual growth of the business to the growth of the stock price. And I think that is about to change. I think in 2025, China will outperform the US market. Thank you guys very much for watching, and comment down below, what are you betting big on 2025 and what key industries are going to be the major players in 2025. Thank you very much for watching, and comment down below what we should do a video on next.